Also, welcome to Invest, talk about investing, finance, and professional development for today's area terms only. So for today's video is going to be another conceptual one, and this is a highly requested or anticipated one, if you may. So the title is obviously how to take profits. So what I'm going to go through is my personal methodology on how I generate profits, right, and when to be, not greedy and when to not be too patient. Just have that sweet balance on when to execute your exit strategy, right? So with respect to the following presentation is going to go through the methodology is basically the chronological order on how I apply my personal methodology. It's not starting from the most macro to the most micro like the typical conceptual video. This is a more of a tactical step by step, if you may, right? So and I want to just apologize up front if it's too convoluted. So feel free to watch this multiple times, or if there's specific questions, feel free to reach out personally on the comment section, which I think your questions are oftentimes, allow for people to also learn from, because we all have different way of thinking, different way of approaching, and obviously your personal perspective is something I appreciate. I look forward to learning from your methodology to see how it aligns with my methodology, right? With respect to the first one, when you're investing into a stock or cryptocurrencies, right? There are two pools of capital you want to allocate. One is the short-term capital, which is the pool of money that you use to swing trade, which I do, which is like a small percentage of my capital allocation, which is only like 10%. Just like allows me to have some skin in the game. It's like also dynamic and fun, right? But the bulk of my allocation is really on the long-term capital allocation. So when you have let's say $100, I would allocate $10 for me to swing trade, and the $90, which is the remaining of my capital allocations, in a total $100 for long-term capital allocation, which I just allow that to sit and hold, or have it on the side for long-term capital gains to dollar cost average going forward, right? So before we dive into buy into any investments or assets, always think about, so this is the pool of money that I have. How much do I have for short term and how much do I have for long term? Right? That's ultimately dependent on, your risk aversion. Like, are you more of a long-term investor? Or are you more of a swing trader or a day trader, if you may? A day trader would typically have, a less capital allocations in long term versus short term for obvious reasons, right? So the second point, after you understand your capital allocation, would be understanding the price target, right? And for me, knowing the fact that the bulk of my allocation is within a long-term side of the house, right? So I would identify the price target for myself. So technically, so with respect to Ethereum, which I talk about on a daily basis now, my price target is $25,000 in the next 3 to 5 years or 10 years from now, right? So that's the definitive price target I have for long term. So short term, that will be contingent on a couple of things, which is the following step that I will go through on the third point. Right, with respect to the MACD and the RSI indicators that we talk about on a daily basis in my technical analysis video, right? Is when you understand that the MACD is overstretched or the RSI is overbought on all levels, and the typical time spectrum that I look at would be on a daily time frame, right? That would be applicable for short-term trading when you see that it's overstretched and it's like basically a little bit up on the way, and you see on the curvature line, and I can go through that specifically. Like for example, right, for Ethereum, we're looking at on daily right now, right? When you see, let's just like use a more of an example from back in the day, right? You see that when we were stretching all the way to the peak, right, to all the way to the top at the 4,383, why was this chart indicating that it was overstretched at all levels? Because if you look at the MACD line, you understand that it was extremely overstretched to the point that you form an outlier. And also with respect to the RSI, it also confirms with the MACD as well. You could see how extremely overbought. We're way above the 90 levels, right? A typical good level to buy at for me personally for cryptocurrencies or for stocks would be anywhere when it's like at the blue levels, right? At the 30-ish or like below 35, right? When you see anything above 70, which is technically the equator line above the heat zone, that's when you should be watching out for, right? And also with respect to how much is dragged up, right? Whenever you see a curvature back down from the apex, it indicates that the MACD was basically cooling off, right? And that typically indicates that that was the peak of the apex. So going back to the third point right here, right? Keep a close eye on, for the stock or for the cryptocurrencies when the MACD and RSI indicators reaching to a certain level, right? You also want to look at the valuation methodology, right? And with respect to that, that will be looking at the market caps, right? Compare that specific assets versus another assets. And this is more applicable to equity, which are companies, right? You want to look at the valuation, and this typical methodology that you use. You don't have to go crazy. Would be like enterprise value over EBITDA, right? Or enterprise value over revenue if the company does not generate any, net profit at the moment, which are very common for a lot of growth companies, right? And let's say you're buying a company that's in the healthcare space. Like let's just compare like Moderna versus like Johnson and Johnson, or other healthcare companies, right? By identifying which company is overvalued or which company is undervalued, is to compare comparable companies with the same methodology, right? And the methodology again would be the enterprise value over EBITDA, right? It's basically earnings that the company generates, right? Or revenue. You could also compare that as well. But I think earnings is more of a, a common representation that Wall Street analysts like to use to value companies, right? And you see that with respect to that division, you get a multiple from it, right? Like enterprise value divided by the EBITDA, right, of Johnson Johnson versus Moderna, right? Basically enterprise value over EBITDA again, right? And one could be trading at like 9 times, and one could be trading at 13 times, right? So, and you compare the two. Obviously, one is demanding a higher valuation, right? But then you dig a little deeper by doing research, by reading up on the companies. Why does this company demand a higher valuation? Or has that historically always been the case? Right? And you do a little bit of industry research on comparing the overall healthcare index, right? All vaccine companies. What's the average of all vaccine companies being traded at the moment? Right? And once you identify all of that, understand the business fundamentals by going through, my video again on how to invest, looking at the industry, looking at the business fundamentals by the understanding the business model, understand the management team, how substantive and resilient is the management team, what's their track record or Rolodex that they have, by understanding are these people backable, right? And then obviously perform the valuation that aligns with your risk aversion, right? And once you encapsulate all of that, with MACD and RSI indicator all aligns and checks off all three boxes for yourself, then that would be the optimal time for you to take that profit that you've been looking for, right? And then the next one would be once you identify the ideal level for yourself, obviously you have the short-term gains, right? Short-term gains is more obvious, right? You look at the MACD and the RSI, that short-term wise, it was overinflated. Like for example, like Ethereum hit $4,000 mark or 4,400 something mark, right? You knew that by then MACD and RSI was highly overstretched. So it makes sense to maybe take 40% of your profit. And again, the ratio of 40%, that to sell, 60% to keep on hold, it's my personal ratio, right? The reason I do that is because 60% still indicates that long term wise, you're still bullish on the long term value proposition, right? And at the same time, you don't have to take, that much of a drastic tax hit, which I typically don't like to pay tax. I think paying taxes is detrimental to your capital gains, especially on a short term perspective, which is like in New York State, it's like 51%, right? So selling 40% and then and with respect to long-term capital gain, that's something that is more definitive based on valuation, right? That Ethereum, your personal valuation that you want to sell would be when Ethereum, for me, $25,000, right? Once it reaches that price target, then I'll sell all of it, right? But we'll see how that goes once we get to that level, right? Maybe by then it will be still extreme, it will be undervalued by then. Like 10 years from now, you'd be like, oh, Ethereum should be reaching $1 million per Ethereum at that point. Who knows? The global economy and the technological side of the innovation can evolve over time. That who knows about how the valuation will progress going forward, right? And once you understand that, go to next level, right? Once you sell the 40%, right, of the short-term capital gains, again, right, the 40% is the profit that you have incurred in the capital allocation, right? I hope I haven't lost you. And then you reallocate that 40%, from the profit that you took to the capital allocation. So you are adding on to the pool of dollars that allocate for long-term gains, right? Because ultimately you want to be long-term investors, right? Again, this is the methodology that I use because I'm a long-term investor, right? And you shift that 40% of the short-term profit that you made. Like for example, when Ethereum hit 4,400 when it was all-time high a couple months ago, I took 40% of the short-term gains that I had, put that on the side into like my saving account or whatever, and I use that for my long-term gains to further dollar cost average, and I just hold going forward, right? And the ideal level that I kept talking about would be like 2,750, 2,450. That's when I would incur more long-term capital allocations by dollar cost averaging at that optimal level, right? And then the next one would be once you get that momentum, you start to see it's like a loop. You know what I'm trying to say? And then you just basically rinse and repeat the money loop over and over again, right? You basically have, again, right, define your short term, long term capital gains allocation, define the short term, long term price target for yourself, and you triangulate from there, right? For short term, you typically use MACD and RSI. And for long term, you typically use valuation, MACD and RSI at the same time, right? And then you sell 40% of the short term profit, right, to deploy that into the long term profit once it reaches that short term price target that you've seen based on looking at the MACD and RSI, right? And then you reallocate the short term capital gains to the long term capital allocation, right? And then you repeat the cycle over and over again. Basically, in an even more layman term, would be think of like the short term gains as like a pool of it's like a hamster wheel. It just keeps going. You keep printing money in that, over and over again, like a cycle, right? And you basically use the money that you generate from the short term gains to keep making money by putting that into the long term capital allocation and allow that dollar or that assets to appreciate over time for yourself. Hopefully, I haven't lost you. It's a specific way of, this is my way of taking profit, if you may. And I hope this is not too convoluted, if you may, right? If there's any specificity that you would like me to further, dissect on to give you more clarity and transparency on, hopefully this is helpful. Feel free to watch this a couple of times, right? This is something that has worked for me, and this is something that I have cultivated with, basically work on Wall Street for over like close to 10 years, right? And this is something I've identified over time that works for myself, that, that allows me to continue to keep that money loop cycle going, at least in a very consistent way. You know what I'm trying to say? Because like ultimately I don't look for making a quick gains. I always look for consistent returns on investments. Hopefully this is helpful. I know this is highly anticipated, and sorry for being too draggy, if you may. But I really appreciate you, and hopefully this is helpful. Take care.